In this section, we're going to learn how to distinguish a capital expenditure from an immediate expense. Whenever we spend money on an asset, we need to figure out how to treat it in our books of accounting. Would the amount we spent be added to the cost of that asset? If so, we would call it a capital expenditure. If the amount we spent would not be added to the cost of that asset, we would expense it immediately. Whether to treat these amounts as capital expenditures or expenses requires judgment. If the amount we spend increase capacity, increase value, or extend the useful life of the asset, then we add that cost to the asset's cost. Therefore, it's a capital expenditure. But if the amount we spend does not increase capacity, value, or useful life, and that amount was just to maintain the item or restore it back to working order, that cost is treated as an expense. Some companies don't bother to go through this and they'll say, okay, if the amount is small, we're just going to go ahead and expense it immediately. But if it's large and they'll have a threshold, say maybe $1,000, then they will go through this analysis to see whether it's a capital expenditure or expenses. But either way, this requires judgment and there's no clear-cut answer. In accounting, we practice conservatism, so you want to make sure that your assets are not overstated and your profits are also not overstated.